Kind of a funny title here, that Starbucks should buy Luckin, and I actually saw a couple stories, I think, today where people were alluding to that too. Starbucks in the beginning, when we were doing the work on the IPO deck, Starbucks actually tried to shut down Luckin via lawsuits because they saw them coming and were unsuccessful in doing that. So for a year and a half now, Starbucks has known Luckin, has been there, but they've really tried to shut them down, and you'll see a slide in a second that they're trying to imitate the Luckin model. Well, they should frankly just buy them. They've got Luckin's about a $6 billion company today. Starbucks is a $100-some-odd billion company. They've got great technology. I'm not going to make a case for why Starbucks should buy them, but I certainly believe that the new CEO should think about it. And interestingly enough, on slide 38, there's a few commentary around what Starbucks said, and I just pointed to the one on the upper right, where China is much more digitally savvy than any other market in the world. Well, the most digitally savvy company in the world is Luckin. And so if Starbucks wants to become digitally savvy, frankly, yes, they can do it, but it renders their strategy or their current strategy of building the third place stores in China kind of a mute strategy. I mean, yes, I love going to a Starbucks and sitting down and working, but I also love grabbing a Starbucks and go. So there's different transactions, but they're the same transaction. If I like Starbucks coffee, I'm going to go there for a number of different occasions. And if I like Luckin Coffee, I'm going to go there for a number of different occasions. And certainly, Luckin is having the impact on China, and Starbucks needs to think strongly about their position on Luckin and the potential that it has for their business. Slide 39, Luckin equals superior convenience offering. Starbucks can't compete with Luckin on convenience. Luckin offers a start to finish total transaction time of 50% less than Starbucks in its offering. And that should clearly allow them, again, one of the most important numbers that we continue to focus on as we go forward with Luckin is taking that transactions per day from 400 to 700 to 1,000. And certainly the fact that they have such a rapid transaction time suggests that they can certainly grow that number from 400 to 700 on an average basis. I know they're already doing 700 at 40% of their store base today. So. Slide 40, Luckin has superior per cup economics. And again, I think back of the controversy or the criticism of Luckin early on in the early days, before there was a lot of information out there on the company in terms of, can they ever get can they ever have, a restaurant level margin, right? Or even can that margin approach Starbucks? And certainly it can, because the cost structure on a per cup economics is significantly better than Starbucks. So again, as they ramp that up and as volumes grow, those numbers could look even better. But certainly the cost structure of Luckin suggests that there's a lot of room to run, and the guidance for third quarter profitability appears to be a fairly certain target for them to eat. Nothing certain, but certainly. As I said before, the consumer in China is price conscious, and as you can see, Starbucks is creating a pricing umbrella for Luckin to be successful, and you can see that on slide 41. Starbucks prices are 30% higher, and again, this is on a list price, so using the discounts, it's even further, or it's even less than what Starbucks is, but we know they're not going to survive at that, that discounted price, but certainly the list price is 30% lower, and then, as they're suggesting, the coupons brings it down even more. So Starbucks has really created an environment for Luckin to be successful from this premium strategy that Starbucks has. And part of the reason why Starbucks needs to charge that is because they have these big expensive units and these expensive overhead that they can't cut costs too much, or they can't bring prices down too much. They can't increase discounting. So it's going to be really hard for them to compete against Luckin just because the Starbucks cost structure is so high relative to that of Luckin. So do you think Starbucks is worried? And again, I alluded to this before on slide 42. Starbucks unveils express retail store experience in Beijing, Starbucks Now. They clearly see Luckin coming. They're experimenting with it. kind of goes back to my thought, should they just buy Luckin? Well, maybe they should, maybe they shouldn't. But this is a business model, again, in China with 814 million consumers digitally enabled. This business model makes a lot more sense to sell a cup of coffee than the third place in China.